Yeah, good morning, students. So, welcome to GST Amendments class, which applicable for November 2020 exams. So, today the sessions goes like this. We are starting at 9 o'clock, 9:05, and we'll continue till 10:30, 9 to 10:30, and then we'll have a break of half an hour. Then from 11 to 12:30, another session. So morning, it will be for 3 hours, 9 to 10:30, 11 to 12:30. After which we'll have a break. We will have a break right now. And then afternoon session will start at 2:30 until the completion of all the amendments. Afternoon will complete in one session, in one go. Clear? So this is how today's class is going to be. So I've already posted the material in our Telegram group. Hope everyone has downloaded it and get ready for the material. Anyhow, I will also share the same here on the screen. But whenever I'm explaining with the help of the notes, you may not be able to see the material. So that is why I ask you to maintain a soft copy in another device or a hard copy, preferably. Okay, ma'am. Right. This is a material which I've given in our Telegram group. So part B, 4B, indirect taxes, statutory updates for November 2000 exams, November 2020 exams. For the convenience of the students, in this material, I've also included May 2020 amendments as well. As you all know, we didn't have any exam attempt in the May 2020. For this November 2020, we can expect the amendments from November and as well as the amendments applicable even for the May. So that is why in this material itself, I have given the amendments of May 2020 as well. So in this material, you have both November 2020 and as well as May 2020 amendments. In a single material, you will get amendments of both the items. Clear, ma'am? Now, let us start with first one. Of course, the first chapter is GST and introduction in India, in which we didn't have any amendments. Now moving on to the second chapter, of course, I mentioned it as a first chapter in this material. Supply under GST. Supply under GST. First one, services by way of grant of alcoholic liquor license is neither a supply of goods nor a supply of services. So grant of alcoholic liquor license against the consideration in the form of license fees or application fees, by whatever name it is called, undertaken by the state governments, in which they are engaged as a public authorities, is to be treated neither as a supply of goods nor as a supply of services. Now let me tell you with the help of an example. So majority of the provisions here I'm going to explain you with the help of examples. So everyone get ready with the notebooks and everything. So hope everyone is able to see my notebook. So part 4B, amendments applicable for November 2020 exams. So everyone ma, just respond. Are you able to see the notes? Yes, very good. This is an example for the first amendment. Right. Example, there is a person, Mr. Vijay. Mr. Vijay applied for liquor license with Telangana state government. With Telangana state government. Mr. Vijay applied for liquor license with the Telangana state government. Basically, in the Telangana state government, liquor licenses is giving on a token basis. Those who want to or who wish to start the wine shops, bar and restaurants, they have to make an applications first. And whenever that state government, Telangana state government is giving the licenses, alcoholic liquor licenses, they have to make an applications first. All the applications will put in a box on lottery basis. They will pick up who's ever the application coming. For that people, that license will be given on lottery basis. Now the licenses are relating to the alcoholic liquor is given in the Telangana state government. Assume that Mr. Vijay made an application and he got license from the Telangana state government. So what Telangana state government is doing here, granting the alcoholic liquor license. Alcoholic liquor license. For which Mr. Vijay has to pay consideration in the form of license fees, application fees, by whatever name it called. By whatever name it called. Right. Now the question arises whether this transaction liable to GST. Now whatever the license fees or application fees paid by Mr. Vijay, license fees or application fees paid by Mr. Vijay to the Telangana state government for granting this alcoholic liquor license. Now, will this be liable to GST? Answer is no. Answer is no. Because as per the latest amendment, what they have said, sir, granting the alcoholic liquor license, what they have said, it is neither supply of goods nor supply of services. Neither supply of goods nor supply of services. Neither supply of goods nor supply of services. Hence, what will happen? No GST is leviable. No GST is leviable. Right now. But this benefit of exemption is only for the transaction of granting the alcoholic liquor license, not for all other natural resources like granting the licenses for using the spectrum, etc. Are you following now? Right? There is a telecom company made an application for the usage of spectrum, which is a natural resource. Now, whenever the government granting the license to use the spectrum, that particular transaction liable to GST. All other transactions are liable to GST, right? Except this, only this granting of alcoholic liquor license is not liable to GST now, right? This is a first amendment. Hope every one of you noted down this. So now let's move to the material again. So that's the first transaction. That is the first transaction, right? So services by way of granting of alcoholic liquor license against the consideration in the form of license fees or application fees by whatever name called undertaken by the state government in which they are engaged as a public authorities to be treated neither as a supply of goods nor as a supply of services. Hence not liable to GST. Because as per the provisions of section 7, in order to levy the GST, in order to treat a particular transaction, the first parameter to be satisfied is that supply of any goods or services. Right now, it is neither supply of a goods nor supply of services, hence not liable to GST. But look at this important analysis. It is applies to only supply of service by way of granting of a liquor license by the state government as an agreement between the center and states and has no applicability. This is the key point here, and has no applicability in respect of other licenses or privileges for a fee where the GST is payable. Now, what do you mean by it? What do you mean by it? You can see here the example. Services provided by the government to business entities including the privileges, licenses, mining rights, natural resources such as spectrum, etc. other than above alcoholic liquor license or taxable under GST under reverse charge mechanism. So whenever the government providing these services to the business entities in the form of providing the licenses, mining rights, natural resources usage like spectrum, they are liable to be taxed. They are continuing to be liable to tax under the GST under reverse charge mechanism. We have the exemption benefit only with respect to this services by way of granting of the alcoholic liquor licenses. Next, moving on. Second point. No levy of GST on the services of display of name or placing of nameplates of the donor in the premises of charitable organizations receiving donation or gifts from individual donors. Now, what is this? So let us take an example. Example for the Second Amendment. We, the Shrestha, have donated let us assume that rupees 50,000 to a charitable trust. To a charitable trust, right, which is running schools for the benefit of the orphans, poor children's, economically weaker background section children's. Right now, this charitable trust, which is running the schools for the poor children's, what they have done with this 50,000 is, right, they have displayed the names of, assume that Ram Harsha sir and Satyaraju sir on the, assume that they have purchased some blackboards with that amount, blackboards purchased from the donated amount, purchased from the donated amount. See, just by simply displaying the name of the donors, it's not giving any commercial gain to the donor here. It is not giving any commercial gain to the donor here. Instead of writing the names of Harsha sir and Satyaraju sir, If the charitable trust retain the Shrestha educational institution, the Shrestha for CA and CMA, then that gives a commercial gain to the donor. Who is the donor here? Shrestha for CA and CMA. See, just by displaying the names of the donor, it's not giving, a promotional rights, that it's not giving any advertisements of the services provided by the Shrestha. So no commercial gain to the donor here. When there is no commercial gain, when there is no commercial gain. So from this we can simply understand that there is no commercial gain to the donor, commercial gain to the donor, commercial gain to the donor. Hence, the donated amount not liable to GST. Hence, the donated amount not liable to GST. Sir, what if the case if there is a commercial gain? We insisted that you must write our coaching institution names on whatever the goods you are going to purchase. If you are purchasing the blackboards for the taking the classes, on each and every blackboard you need to write the names traced for CA and CMA, and you need to display that whatever the services provided by us in your charitable trust premises. I will put up a electronic board, an electronic display board where the services provided by Strata will display time to time. If I put these conditions, on these conditions, if we made any donations to charitable trust, there is a commercial gain to us. Our services are getting promoted there. Our services are getting advertised there, from which we are getting some commercial gain. Now, the donated amount is liable to GST. Antekani, just by displaying the names of the donor, or just by displaying the words like good wishes, these things not gives any commercial gains to the donors here. These particular displaying of the names of the donor or the wishes from the donor not giving any commercial gain to the donor. So hence not liable to GST, not liable to GST. You might have seen in the temples, you might have seen into the some charitable trust, like whenever you've gone there. So whenever you find some article, some item is there, like a water purifier, a air cooler, or air conditioner, right? Even temples, when it comes to the temples, that whoever giving the donations to that particular temple, even they have arranged some seating arrangements, some benches, on that benches they will write their names, right? Of course, that may be from the temple authorities as a token of gratitude. Okay, this bench is donated by so and so person. If person name written on the board, written on the bench, nothing, no commercial gains to the donor here. Instead of that person name, if that person's company name displayed on that bench, in that air conditioner or water purifier, if that person's company's products are displayed through electronic boards and everything, displaying boards, now that gives a commercial gain to the donor and which is liable to GST. Are you following, ma? So that is the second amendment. Clear? So hope everyone noted down this. So look at the provision. Look at the provision, ma. So no levy of GST on the service of display of name or placing the name plates of the donor in the premises of charitable organization, in the premises of charitable organizations, right? Receiving donations or gifts from individual donors. Example, Seema, example, good wishes from Mr. Rajesh, printed underneath a digital blackboard donated by Mr. Rajesh to a charitable yoga institution. And donated by Srimati Malati Devi in the memory of her father, written on the door or a floor of a room or any part of the temple complex which was constructed, right, from such donations. Note, in the above examples, look at this note point. In the above examples, it may be noticed that there is no reference. This is a key point. There is no reference or mention of any business activity of the donor, which otherwise would have got advertised. And that means if they displayed the name of the business or its activities, then it would have got advertised. It would have got advertised. So thus, where all the three conditions are satisfied, what are they? First one, the gift or donation made to a charitable organization. Number two, the payment has the character or a gift of donation, and the purpose is philanthropic. It must be philanthropic donations, that is leads to no commercial gain. Leads to no commercial gain. And not an advertisement, hence GST is not leviable. GST is not leviable. Clear, everyone? If there is a commercial gain to the donor, if the donor insists the charitable trust, you must display my company name, you must advertise my company's products, then that will give a commercial gain to the donor, that is liable to GST. That is liable to GST. Okay, ma. These two are the amendments from supply under GST. Of course, these two amendments are not a new amendment, not November 2020 amendments. These two are May 2000 amendments only, sir. These two are May 2000 amendments only. I'll tell you which one is November and which one is May 2020. Okay, now next, charge of GST. Next chapter. Let us see the amendments from this particular chapter. Manufacturer of aerated waters and supplier of aerated waters cannot opt to pay tax under composition levy. Composition scheme of payment of taxes. These two people are not entitled for opting for composition levy, right? I'll spare the time for the doubts last 5 minutes, in every session. Last 5 to 10 minutes, I'll spare. Right, in that 5 to 10 minutes, whatever the doubts you got, you can ask in that particular last 5 to 10 minutes. Okay, ma? Right? Okay. So manufacturer of aerated waters and supplier of aerated waters cannot opt to pay the tax under composition levy, and they must opt for the regular scheme of payment of taxes. Composition scheme not applicable even if they satisfied the threshold limit conditions, that 75 lakhs or 1.5 crores as the case may be. See, there are some sin goods, right? You can see that ice cream, pan masala, tobacco and tobacco substitutes. These people are not eligible for composition schemes. These people are not eligible for composition scheme. Now, along with this, even the manufacturer of aerated waters and suppliers of aerator were also covered under this category. So, what do you mean by aerated waters? You can take the examples of tonic soda, cola water, right? Even you can take the examples of all distillery waters, drinking waters, right? Where the waters are sold in a bottle, 1 liter bottles, 2 liter bottles, right? Ma? They are said to be the aerated waters. Cool drinks, yes, soft drinks also covered under aerated waters category, right? Ma? Soda, waters, everything. These are covered under the category of aerated waters. Now, these people are not entitled for composition scheme. They have to pay compulsorily tax under regular scheme of taxation only. Right? Even if their turnovers are less than 75 lakhs or 1.5 crores respectively. Still, they cannot opt for composition scheme. Clear, ma? Next, moving on. Manufacturer and as well as supplier. Manufacturer, if we take the example of JK Beverages, they are the manufacturers of aerated waters. Narmada Energy Drinks, manufacturers of aerated waters. Right? These people are not eligible for composition scheme. Also, whoever engaged in trading of aerated waters, buying and selling of aerated waters. I have a pawn shop. I am purchasing that soft drinks from the manufacturer, from the dealer, whosoever. I am buying and selling. Even for me also, composition scheme not available. I should pay the tax under normal scheme only, right? So manufacturer and as well as supplier, you must be very careful here. Manufacturer not entitled for supplier composition scheme, and as well as supplier are not eligible for composition scheme. Next, look at this second amendment, which is very interesting. Supply of services by an author, a music composer, photographer, artist by way of transfer or permitting the use or enjoyment of a copyright relating to original literary, dramatic, musical or artistic works was payable under reverse charge by the publisher, music company, producer. Right. Now what is this? Let me tell me with the help of example. Who are covering here, ma'am? This is the example for the second chapter. Charge of GST. And second amendment. Example for second amendment. Charge of GST. Example for second amendment. Who are covering here, ma'am? Main provision. Author, music composer, photographer, artist. So here these people are supplier, and who are the recipient here? Publisher, and then music company, producer. So these people are recipient. Now what are the services are getting transferred here? Transfer or permitting the use or enjoyment of original literary, dramatic, musical, artistic works. Right? So these people are providing these services to the recipients. Now, before the amendment, before the amendment, these services are taxable under reverse charge mechanism. These services are taxable under a reverse charge mechanism. These services are taxable under reverse charge mechanism. These services are taxable under reverse charge mechanism. Now, after the amendment, what happens? After the amendment, now the supplier has got the right to pay the tax under forward charge mechanism. Supplier is provided with an option to pay tax under forward charge mechanism. Now, what is the provision after the amendment, ma? Now in these services, now the supplier is provided with an option. Just a second, ma. So now after the amendment, what happens is supplier is got the option to pay the tax under forward charge mechanism. But you will get a doubt here. So why unnecessarily supplier take the burden of payment of tax? See, when these services are taxable under reverse charge mechanism, supplier sit back and relax now, right? Why unnecessarily? He will take this option of paying the tax under forward charge mechanism. Literally speaking, sir, the reason behind this amendment is suppliers insisted, like the authors, music composers, photographers, artists insisted to bring this an amendment. Why? Because, see, assume that I'm an author, sir. I'm an author of taxation book, right? So my services are taxable under reverse charge mechanism. To whomever I've given this publishing rights, the publisher, let us assume that I have given the publishing rights to, Himalaya publishers, the Taxman publications. Taxman publications. I've given the rights to Taxman publications, right? So now my services are taxable under reverse charge mechanism. Taxman publications will pay the tax under reverse charge mechanism. Taxman publications will pay the tax under reverse charge mechanism, being it is a recipient. Being it is a recipient. Now let us drop the same example. Example. So myself, author, author, and I'm giving the publishing rights, right, to the Taxman publications. I've transferred publishing rights of my tax book, right? Now this service is liable to GST, liable to GST under a reverse charge mechanism. Reverse charge mechanism. So he is the supplier and recipient. Recipient. Now taxman publications will pay the GST under reverse charge mechanism. So now tell me, whatever the input goods I have purchased for preparing this book, whatever the input services I have received for preparing this book, now can I claim the input tax credit attributable to it? Can I claim? Answer is absolutely no. I cannot claim. Yes or no? Right? See, I've purchased some books, I've collected some books, I've taken some ICA books, I've taken some reference books in order to prepare the tax book. In order to prepare the tax book. Right, ma? See, whatever the I've entered the contract with the taxman publications. But here, whatever the input goods I have purchased, whatever the input services I have received, whatever the capital goods I have used, I purchased, the credit attributable, input tax credit attributable to the above to the goods and services, to the above goods and services not eligible to claim, not eligible to claim. Why? Because my services are taxable under reverse charge mechanism. I'm not going to collect any tax from output service, from my recipient. No? I'm not going to collect any output tax from recipient. See, how can input tax credit be allowed? Whenever you have collected the output tax from your ultimate recipient, from that output tax, whatever the input tax you have already paid, that will be allowed as credit. But when my services are taxable under reverse charge mechanism, when I'm not going to collect anything from the recipient, how can I claim this input tax as credit? No. That will be pooling up and pooling up and pooling up, and that will be carry forwarding and carry forwarding, carry forwarding. There is no question of refund now. The refund is given only to the zero rated supply, and my service is not a zero rated supply. Refunds is given to the zero rated supplies, right? And refunds is given to the UN bodies, like various countries, consulates, various countries, embassy offices. For their services, the refunds are allotted. Refunds are given, ma. So unutilized input tax credit, will it be allowed as in a refund to the normal cases? No. You have to carry forward that unutilized input tax credit to the next tax period. But when my services are taxable under reverse charge mechanism, when will I get the opportunity of using my input tax credit? No. So every time my input tax credit, what's happening? It is carry forwarding like anything. It's pulling up like anything, and it's carry forwarding like anything. So being an author, being a music composer, being a photographer or an artist, where my services are taxable as long as under reverse charge mechanism, I won't get any opportunity of claiming my input tax as credit. That is why all these people insisted the department at least give an option to pay tax under forward charge mechanism. Those whoever having the input tax credit, they will use this option. That is why this amendment not made applicable to all the service providers. It is an option given to them. Babu, if you want to claim input tax credit, you have some huge amounts of input tax credit balances with you, then utilize this option, pay the tax under forward charge mechanism. So whenever we set forward charge mechanism, the supplier is a person liable to pay tax. Now the author will collect the output tax from the supplier, from whatever the output tax he collected, whatever the input tax he already have, that input tax will be adjusted to the output tax, and he will pay the remaining output tax to the department. So that is why right now all these people, the suppliers, insisted the department to give an option to them to pay the tax under forward charge mechanism. See, if you don't have any input tax credit, continue with the old provision, reverse charge mechanism. But if you have an input tax credit, select this option. Select this option. Are you following now? Right now, after the amendment, after the amendment, supplier has the option to pay tax, under forward charge mechanism. So now he can collect the tax, collect the output tax from recipient. Now he can claim input tax credit. And now he can claim input tax credit. Now he can claim input tax credit. Sir, but for doing this, that supplier has to satisfy some conditions. Supplier has to satisfy some conditions. So what are the conditions to satisfied with? First of all, he must be a registered person. He must be registered with the department. Conditions to satisfy. Conditions to be satisfied to opt for. Conditions to be satisfied to opt for forward charge mechanism. Conditions to be satisfied to opt for the forward charge mechanism. First of all, he must be registered with the department. The supplier must have taken a registration, must have taken the registration under the CGST Act, and he should file a declaration. He should file a declaration to this effect. Right? For this financial year, I want to pay the tax under forward charge mechanism. He should file a declaration in the prescribed form that he exercises the option to pay tax, to pay GST under forward charge mechanism. To pay tax under forward charge mechanism. Right, but they should file a declaration. They should file a declaration that they have exercised this option to pay the tax under forward charge mechanism. Now, once this option is exercised, once this option is exercised, once this option is exercised, he cannot withdraw. He cannot withdraw during that period. During that period. That means once you exercise this option for a particular financial year, throughout the year, your services should be taxable under forward charge mechanism. Don't say that, oh, okay, after completion of 3 months or 6 months, oh, fine, now my entire input tax, I was claimed as credit, I have taken as credit. So now my input tax electronic credit ledger showing zero balance. So from here onwards, okay, let's go with the existing provisions. Services taxable under reverse charge mechanism, not allowed. Not allowed. Once for a particular year, if you opted to pay the tax under forward charge mechanism, throughout that year you have to pay the tax under forward charge mechanism only. In between the year you cannot change the option. In between the year you cannot change the option. Here you need to remember Mahesh Babu dialogue. ఏంటి ఒక్కసారి commit అయితే so once you decided and committed to pay the tax under forward charge mechanism, you have to follow that same method throughout that year. In between, changing of option is not allowed. If supplier satisfies all these conditions, then he can choose to pay the tax under forward charge mechanism. Sir, is it mandatory? It's not mandatory. It's given an option to you. It's an option given to the supplier. Whoever having the large amount of input tax credit balances with them, they can use this option to pay the tax under forward charge mechanism. Is that clear? So that is the reason for the amendment. Clear, everyone? No. Let's moving on. So this is after the amendment. The author has an option to pay the tax. The author has the option to pay the tax. Right? Option to pay the GST liability either on reverse charge mechanism or on forward charge mechanism. However, an author can choose to pay the tax under forward charge mechanism if he has taken registration under the GST Act and filed a declaration regarding that he exercises the option to pay the GST under forward charge mechanism. Clear, ma? And he shall not withdraw the option within a period of 1 year from the date of exercising that option. He cannot withdraw. Once he opted for that forward charge mechanism, for 1 year he has to pay the tax under forward charge mechanism only. And yet another important condition which I forgot in my notes, look at here, he makes a declaration on the invoice issued by the by him in a prescribed form to the publisher. So whenever I am issuing an invoice to the publisher, in that particular invoice I have to make a declaration, I have chosen to pay the tax under forward charge mechanism. Then only you have a right to quote some tax in that particular invoice. So basically, when your services are taxable under reverse charge mechanism, being the supplier, you cannot levy the tax in your invoice. That recipient will issue the tax invoice in which he will quote the tax element. He will quote the tax element. That supplier's invoice should not contain any tax element in his invoice, because anyhow is not going to collect anything, is not going to collect anything, any tax from the recipient. When the services are taxable under reverse charge mechanism, the recipient will pay directly the tax to the department. So that is why supplier's invoice should not contain the tax details. Recipient's invoice should contain tax details, tax invoice. But when you opted for the forward charge mechanism, that author should make an intimation in that invoice so that the publisher can understand, okay, my author opted for forward charge mechanism. That is why his invoice containing the tax details. So I need to pay the tax to the author. Clear everyone? That is the yet another condition, right? So let me write on the note whereby you can also note it down. Supplier makes a declaration on the invoice issued by him to the publisher. Next. And as I said, it is an optional scheme only. It is an optional scheme only available to the author to pay the tax under forward charge mechanism and reverse charge mechanism. Okay now, right. Now moving on. Some new services covered under the reverse charge mechanism. New services covered under reverse charge mechanism. In that first one, transfer, supply of services supplied by any person by way of transfer of development rights of floor space index, including additional floor space index for the construction of a project by a promoter. Transfer of development rights. The same kind of transaction we have in income tax as well. In capital gains, we studied section 45(5)(a) joint development agreements. Joint development agreements, same transaction, same transaction. Now, what is this new service and how it is going to be taxable under reverse charge mechanism? Let us see that. Services supplied by any person by way of transfer of development rights floor space index. Now, what is this concept about? Transfer of development rights of floor space index. Now look at here now. Example. Mr. Anil having a piece of land on his name. Having a piece of land, a plot of land. Plot of land on his name in a very reputed commercial area. Right now, he's having a friend Mr. Sunil, who is actually a builder or a real estate developer. Real estate developer or a builder, right? Now, one fine day, Sunil came to Anil's house. He come up with a proposal, and that proposal is, on this plot of land, let us construct a commercial complex. Let us construct a commercial complex, and let us share the flats. Let us share the flats. That's the proposal. The entire construction cost will be borne by the developer only, builder only. Now here what Mr. Anil has to do is he has to transfer the development rights. He has to transfer the development rights. Are you following, ma'am? Right? He has to transfer the development rights or floor space index. Floor space index is nothing but the construction area, built up area, right? So what Mr. Anil transferring here? Anil transferring the development rights. He's transferring the development rights, TDRs or FSR, for which he will receive the consideration in the form of constructed flats. Constructed flats. Constructed flats. Right. Now assume that on this plot of land, they have constructed a 4-storied commercial complex. 4-storied commercial complex. The last 2 floors taken by the Mr. Sunil for developing that project, for developing that particular project, and the first 2 floors is given to Mr. Anil, right? These 2 floors taken by Sunil, and these 2 floors taken by Mr. Anil. Taken by Mr. Anil. Now, this particular transaction of transfer of development rights in that particular plot of land, liable to GST under? Yes, liable to GST. And liable to GST under reverse charge mechanism. Now, when it comes to the tax treatment, transfer of development rights, floor space index, taxable under the reverse charge mechanism. Reverse charge mechanism. Taxable under reverse charge mechanism. In our example, who is a supplier, ma? The supplier is Mr. Anil. Supplier is Mr. Anil. He is transferring the development rights. And recipient is Mr. Sunil. Recipient is Mr. Sunil. Now, in this example, Mr. Sunil will pay the tax. Sunil will pay the GST under the reverse charge mechanism. Mr. Sunil will pay the GST under a reverse charge mechanism in this particular transaction. Sir, each floor consisting of, let it be some 4 flats. So that means 8 flats taken by Mr. Sunil, 8 flats taken by Mr. Anil. So what is the subsequent sale of these flats? Subsequent sale of these flats. See, we have already learned in Schedule 3 of the CGST Act that specifies negative list of supplies. In Schedule 3, para number 5, serial number 5, explains about the construction services. If all the flats were booked prior to the completion of issuance of completion certificate or prior to its first occupation, which was earlier, the flats were booked earlier of the completion, issuance of completion certificate or its first occupation, then it is an exempted supply covered under negative list. Sorry, it is a taxable supply. It is a taxable supply. If the flats were booked after the issuance of completion certificate, after its first occupation, then it's purely sale of immovable property, and immovable property, as it is not covered under the definition of goods, nothing will be liable to GST. So subsequent sale of the flats, you have to see when the flats were booked out, during the construction or after the construction. During the construction, it purely comes under construction services, right? So after the construction, it purely said to be sale of immovable property. Sale of immovable property. Clear? So first, for this transaction of transfer of development rights of floor space index, right? Now, here the consideration, the supplier will get the consideration in the form of constructed flats, and of course, in the form of certain amount in cash as well. Certain amount in cash as well. You will get that consideration, right? And the tax treatment is that transfer of development rights of floor space index taxable under reverse charge mechanism. In this example, Mr. Sunil, being the recipient, has to pay the GST under a reverse charge mechanism. Now, you can look into the material. Let me share the material. Now, you can look at the material. So, services supplied by any person by way of transfer of development rights of floor space index, including additional floor space index, for the construction of a property project by a promoter. Here, the supplier could be any person and recipient must be promoter. Recipient must be promoter. Then the services are taxable under reverse charge mechanism. And we have some note points for this purpose. Look at here. Look at the note points. Supply of transfer of development rights or floor space index, long-term lease, that is our second transaction of land, right, by a landowner to a developer, or exempt subject to the condition that the constructed flats are sold before issuance of completion certificate and tax is paid on them. Constructed flats, they have used the word constructed flats, that the flats construction was completed already. When the flats construction completed already, then it's purely said to be, supply of an immovable property. Already constructed, supply of immovable property, exempted from GST. Exempted from GST. Are you following, Ma? Next. Exemption of transfer of development rights of floor space index, long-term lease is withdrawn in the case of a flat sold after the issuance of completion certificate, but such withdrawal shall be limited to 1% of the value in the case of affordable houses and 5% of the value in the case of other than affordable houses. So that means if that flats are affordable houses, the rate of GST is 1%. Other than affordable houses, the rate of GST is 5%. The exemption of transfer of development rights and floor space index long-term lease is withdrawn now. Right. And in such cases, the liable to pay the tax on transfer of development rights, floor space index long-term lease has been shifted from the landowner to the builder under the reverse charge mechanism as illustrated in the table above. Earlier, they were covered under exemption. Earlier, they were covered under exemption. Now that exemption has been withdrawn, and made it taxable, right? And taxable under reverse charge mechanism. If it is a affordable housing project, 1% is the rate of GST. Non-affordable housing project, 5% is the rate of GST. 5% is the rate of GST. Clear, ma? Next, and taxable under reverse charge mechanism. Moving on. Next transaction, point number 5C. Long-term lease of land for a period of 30 years or more by any person against consideration in the form of subscription, in the form of upfront amount, called as premium, salami, cost price, development charges, or by any other name. I will clear all your doubts, ma. You can write doubts on a piece of paper. Again, you can ask me in the last 10 minutes, ma. Okay, now. If I clear your doubt right now, then the other people will get distracted, deviated from the subject, or they may feel some disturbance. I will clear all your doubts. Don't worry. All your doubts, please write on a paper. Right? You can ask me in the last 10 minutes of the session. Clear, ma? Yes. Thank you for your cooperation. So long-term lease of land, 30 years or more by any person, against such consideration in the form of upfront amount. So upfront amount. So what do you mean by upfront amount? It's kind of one-time premium payable. Instead of paying the premiums on monthly basis or periodically, we can make the payment of the entire premium in a single payment. So one-time premium, whenever you are paying the one-time premium, you will get some commission. Sorry, concession. You will get certain concession. So either you can pay the lease rentals periodically, or you will pay the entire lease rentals for the entire lease period in a single payment. So whenever you are going to choose for upfront amount, single payment, you will get some concession from the lessor. You will get some concession from the lessor. That is what we call upfront amount, called as premium, salami, cost, price, development charges, or by any other name. And upfront amount and or periodical rent. So both option is given to you. Either you can pay the entire premium in a single payment, or you can choose for periodical payments for the construction of a project by a promoter. Again, same version, especially here, the governments generally give the lands on a lease basis for 99 years, right, for the development of a particular project. Especially it will give, the government will give the lands for the promoters for the construction of the airports or shipyards. That land is given for a period of a minimum period of 99 years, right? See here, 30 years or more, that will be covered under reverse charge mechanism. That will be covered under reverse charge mechanism. Suppose that a government given a land of some 500 acres for the development of a shipyard, for the development of an airport in that particular area, and it will be a long-term lease for 30 years or more. See, many of the builders and construction people also, instead of buying the land, they will choose for the long-term lease of land, because buying the land will cost more than the long-term lease of the land. So that is why many of the people will choose for taking the land on a long-term lease basis for the development of a particular project. Now, in this case, who is a supplier? Example, in our example, the government is a supplier. It is giving you the development rights in that particular land on a lease basis. On a lease basis. And who is the recipient? Promoter. Promoter is the recipient. And the lease period must be 30 years or more. Now, in that case, that services are taxable under a reverse charge mechanism. Services are taxable under reverse charge mechanism. That means the promoter has to pay the tax under GST, under reverse charge mechanism. Same as section 5B, same as section that 5B, same as section serial number 5B. The only difference is that here it is a long-term lease of the land. Majority of the cases you can find these kind of transactions with the government, with the promoters. Government as being the supplier, it won't want to, don't want to take the responsibility of paying the GST and compliance with the GST provisions. That is why this transaction made under the reverse charge mechanism category. Right? So if any promoter taking the land on a lease basis for a period of 30 years or more, either by paying the upfront amount, that means entire premium in a single payment, or by choosing for periodical payments, now that promoter has to pay the GST, being the recipient under reverse charge mechanism. That is a 5 CMO. Next, 15th one. Services provided by way of renting of a motor vehicle provided to a body corporate. Services provided by way of renting of motor vehicles. So supplier could be any person other than a body corporate who is paying CGST at the rate of 2.5 percentage and the equal amount of SGST 2.5 percentage on renting of motor vehicle with input tax credit of only the input tax of the same amount. Any body corporate located in the taxable territory. Recipient should be any body corporate located in the taxable territory. We have a detailed discussion of the same again, don't worry. You can see here. Clarification regarding the reverse charge mechanism on renting of motor vehicle services. Clarification regarding the reverse charge mechanism on renting of motor vehicles service. Look at here, the chart. You just look at the chart, you will get the clarity. So persons liable to pay tax under renting of motor vehicle service under reverse charge mechanism with respect to renting of motor vehicle services, where the GST is payable at BC stands for body corporate, 5% each. Supplier is other than body corporate. Supplier is other than body corporate. Then, when supplier is other than body corporate and recipient is a body corporate, reverse charge mechanism provisions are applicable. Supplier should be other than body corporate, but the recipient must be body corporate. Recipient must be body corporate. Then that renting of motor vehicle services are taxable under reverse charge mechanism. This body corporate being the recipient has to pay the GST under a reverse charge mechanism. Sir, what if the case if the recipient is other than body corporate? Forward charge mechanism comes into picture. Forward charge mechanism comes into picture. Sir, what if the case if the supplier himself is a body corporate? Forward charge mechanism comes into picture. Sir, supplier is a body corporate, supplier is other than body corporate, but he opted for 12%. He opted for 12% rate of GST. He opted to pay the tax at the rate of 12%. Then again, forward charge mechanism comes into picture. Forward charge mechanism comes into picture. Are you following, right? So let us see with some example. First of all, what do you mean by body corporate? Tell me more. Services provided by way of renting of a motor vehicle provided to a body corporate. Services provided by way of renting of motor vehicle provided to a body corporate. See, the definition of body corporate, we have to borrow from the section 2 clause 11 of the Companies Act. Section 2 clause 11 of the Companies Act defines the word body corporate. Yes, some of the efforts made by the students. Gopi created with some special act. Parimala Reddy includes a company incorporated outside the India. Gopi like Insurance Act by the rules of central government, etc. Okay, good. Anyone else? Any more definitions from the students? First of all, let's try to understand what do you mean by a body corporate. Section 2 clause 11 of Companies Act defines the term body corporate. defines the term body corporate. Now what it contains? In a simple language, it it contains all the corporate entities. Just a second, ma. Right. So body corporate, it means a corporate entity which has a legal existence, which has a legal existence, like examples. It covers private companies, it covers private companies, it covers public companies, it covers even OPC, one person company, it covers small companies. Apart from these, it also covers LLPs and even foreign companies, right, ma? It also includes a company incorporated outside the India. It also includes a company incorporated outside the India. Incorporated outside the India. Of course, we have some exclusions as well, sir. It's enough to know this inclusions for the time being. What do you mean by body corporate? Right, section 2, clause 11 of the Companies Act defines the term body corporate. It means a corporate entity which has a legal existence. Examples: a private company, public limited company, one person company, small companies, including LLPs, limited liability partnerships, and also includes a company incorporated outside the India. Also a company incorporated outside the India. Now, according to the chart, let me give you a clear understanding with some tables like supplier, recipient, supplier, recipient, and then supplier opted to pay tax at the rate, and then taxability under taxability under. Now look at here. Sir, a body corporate. Supplier is a body corporate. Now, whether the recipient is a body corporate, other than body corporate, So when supplier is a body corporate, irrespective of the status of the recipient, whether he is a body corporate other than body corporate, other than body corporate. Now here, whether the supplier opted to pay tax at the rate of 5%, at the rate of 12%, it is taxable under forward charge mechanism. It is taxable under forward charge mechanism. Are you following now? Taxable under forward charge mechanism. In the first scenario. So if supplier is a body corporate, by default forward charge mechanism comes into picture, and that the supplier of renting of motor vehicles, he is liable for the payment of GST under forward charge mechanism. Second case, supplier other than body corporate, other than body corporate, other than body corporate, and recipient is a body corporate. Recipient is a body corporate. Now then, here if supplier chooses to pay the tax at the rate of 12%, then forward charge mechanism or reverse charge mechanism? Respond more. Supplier is other than body corporate, recipient is a body corporate, but supplier chooses to pay the tax at the rate of 12%. And 6% CGST, 6% SGST if it is an intrastate transaction. If it is an interstate transactions, 12% IGST. Now in this case, forward charge mechanism is applicable. Forward charge mechanism is applicable because even though the supplier status and recipient status, the conditions are satisfied. If supplier chooses to pay the tax at the rate of 12%, forward charge mechanism comes into picture. Are you following now? Next. Supplier other than body corporate. Supplier other than body corporate. Just a second. Supplier is other than body corporate and recipient is also other than body corporate. Recipient is other than body corporate. So whether supplier opted for 5%, supplier opted for 12%. In both the cases, that supplier of services taxable under forward charge mechanism or reverse charge mechanism. Again, forward charge mechanism. Again, forward charge mechanism. Because the recipient status is other than body corporate. Recipient status is other than body corporate. Right, ma? Next. Fourth case. Let us assume that supplier is other than body corporate. The recipient is body corporate. And supplier choose to pay the tax at the rate of 5% on its supplies. Supplier choose to pay the tax at the rate of 5%. Now, taxable under forward charge mechanism or reverse charge mechanism? Taxable under reverse charge mechanism. Taxable under reverse charge mechanism. So these are the different scenarios when it comes to the renting of motor vehicles. So this is the only case where the supplies of renting of motor vehicles taxable under reverse charge mechanism. So supplier should be other than body corporate, recipient should be body corporate, and the supplier should be chooses to pay the tax at the rate of 5%. Now whenever he chooses to pay the tax at the rate of 5%, That means without any input tax credit. Without any input tax credit. He will get the input tax credit. He will get the input tax credit only with respect to the same kind of input services. And here the supplier will get input tax credit only with respect to input services of same nature. Supplier will get the input tax credit only with respect to the input services of same nature. And that means I'll tell you with the help of an example. Sir, I am a supplier of renting of motor vehicles. I have 100 cabs with me. I have 100 cabs with me. I'm an individual person. So other than body corporate. I'm an individual person. Other than body corporate. I have 100 cabs with me. I'm engaged in the business of renting of motor vehicles. Now I got a contract from Infosys company where they need 150 cabs for the transportation of their employees from office to home, home to office. But I have only 100 cabs. Now I have entered into another service, another supply with one of my friend who is also into similar business. Let me put it on paper for the better understanding. Yeah, if you take the Uber, Ola, that comes under body corporate category again, right? So then it's not taxable under reverse charge mechanism. It goes to forward charge mechanism. That is why I'm taking an individual as example, right? Supplier must be other than body corporate, na? Adi. Mr. X, who is the supplier of renting of motor vehicles, he is presently owning 100 cabs with him. Presently owning 100 cabs with him. Now, what happens is he got a contract from Infosys company. He got a contract from Infosys company where the company needs 150 cabs. Where the company needs 150 cabs. But we have only 100 cabs with us. We have only 100 cabs with us. Right now. Now, for the remaining 50 cabs, Mr. X entered into a contract with Mr. Y, who is also engaged in the business of renting of motor vehicle. So, he is also a supplier of the renting of motor vehicles. Now, from Mr. Y, we have taken 50 cabs. Now, we have 100 cabs. From Mr. Y, we have taken 50 cabs. Totally 150 cabs we supply to Infosys company. Total 150 cabs we supply to Infosys company. Clear, ma'am? Now, here, supplier is other than body corporate. A recipient is a body corporate. Here it is, the Infosys company is a recipient. Recipient is a body corporate. Now, if Mr. X choose to pay the tax at the rate of 5% on this supply of renting of motor vehicle, what the services provided by Mr. X to Infosys company? Supply of renting of motor vehicles. Renting of motor vehicles. Right. So in this example, if Mr. X the supplier choose to pay tax, choose to pay GST at the rate of 5%, choose to pay the GST at the rate of 5%. Now, these services are taxable under reverse charge mechanism. Taxable under reverse charge mechanism. So Infosys company being the recipient has to pay the GST on it. Clear? Now here Mr. X entitled to input tax credit of input tax paid by 8 to Mr. Y on same category of services, that is renting of motor vehicles. See, in order to provide a renting of motor vehicles outward supply, we have received a renting of motor vehicles inward supply from Mr. Y. What are the services received by Mr. X here? Renting of motor vehicles. Same category of supply now. Now, whatever the input tax paid by Mr. X here to Mr. Y on this inward supplies of renting of motor vehicles. Why Mr. X received this inward supplies of renting of motor vehicles? For providing the outward supply of renting of motor vehicles. Same category of service. Hence, here Mr. X is entitled to claim input tax credit of the same category of service only. Right now, if he is having the input tax credit attributable to some other services like insurance, like repairs and maintenance, right ma, so like annual maintenance contract AMC, if these kind of services utilized by Mr. X in relation to that 100 gaps and has paid any input tax on it, that input tax won't be allowed as credit. Only the input tax attributable to the same category of supply, here Mr. X can be entitled to claim credit. He would like to claim the credit for all the services, then he has to choose for pay the tax at the rate of 12%. If Mr. X wants to avail the input tax credit, right? If Mr. X wants to claim the entire input tax credit relating to all types of inward supplies, he has to choose for the payment of tax at the rate of 12%. If he chooses to pay the tax at a concessional rate of 5%, he will get the input tax credit of only the same category of services. Is that clear to everyone? Any doubts? Next. So let me share the material. So you can see here, ma. So if the supplier choose to pay the tax at the rate of 5%, supplier should be any person other than body corporate, and recipient must be body corporate, then only reverse charge mechanism. If recipient other than body corporate, forward charge. If supplier is a body corporate, forward charge. If supplier choose to pay the tax at 12%, forward charge. All these situations we have seen in a table. Okay now? Next. Note. Where any service is placed under reverse charge mechanism, the supplier shall not charge any tax from the service recipient, as this is settled procedure in the law under the reverse charge mechanism. That I know. That you know. Right, ma? Whenever the service is taxable under reverse charge mechanism, yes, you know that supplier should not collect any tax from the recipient. The recipient will directly pay the tax element to department. Thus, in this case, supplier does not issue an invoice charging GST at the rate of 12% from the service recipient. Next. Okay, ma, I'll show you the table again, don't worry. Even at the end of the day, I will put all the notes. I will take the scan of this notes, and the scan will be provided, scanned copies will be provided in the Telegram group, ma. The entire amendments notes. Okay. Yeah. Even if you are unable to note it down right now, don't worry, ma. So end of the day, I'll put that entire amendments notes in the Telegram group. Next, we have one more service to be covered under reverse charge mechanism. Yes, services of lending of securities under Securities Lending Scheme 1997 of Securities and Exchange Board of India as amended. So services of lending of securities. Now lending of securities covered under the reverse charge mechanism, where the recipient being the borrower has to pay the tax under reverse charge mechanism. So lender, that is a person who deposits the securities registered in his name or in the name of any other persons duly authorized on his behalf with an approved intermediary for the purpose of lending of security scheme by the SEBI. He is a supplier, lender is a supplier here, and borrower is a recipient here. Borrower, a person who borrows the securities under scheme through an approved intermediary of the SEBI. Now, what is this concept about? But just like we lend the money, we can also lend the securities. We can also lend the securities. We have a securities lending scheme 1997. We have a separate act for it, separate scheme for it, made by the SEBI, Securities Exchange Board of India. Right? So next transaction is lending of securities. Lending of securities under Securities Lending Scheme 1997. Lending of securities. Now, what is this concept about? Let's take an example. Mr. X holding 1000 securities of, let us take an example of MRF Tires Limited, Madras Rubber Factory, Madras Rubber Factory, MRF Tires Limited, MRF Tires Limited. Now these securities are registered with an approved intermediary. Now through this approved intermediary, I am lending the securities to Mr. Y. I am lending the securities. I am lending the securities to Mr. Y. Right? Through this approved intermediary. Right? So I am giving the securities to this approved intermediary. On behalf of me, Mr. X, this approved intermediary lending securities to Mr. Y. Lending securities to Mr. Y. Lending securities to Mr. Y. Now Mr. X here said to be the lender. Mr. Y is said to be the borrower. Mr. Y is said to be the borrower. Now as on today at this time, let me see at what price the MRF tires tubes trading. 59,289 rupees as on today. So that means 30th September 2020. MRF Tires and Tubes securities are trading at 59,289. For the convenience, I am taking 59,290. Or for more convenience, let us take 59,300. 59,300 for the more convenience. Right. Now, as on 30th September 2020, he has borrowed the securities from me. And these shares are at present trading at 59,300 rupees. 59,300 rupees at present. Now, assuming that he sold the entire 1000 securities, he sold the entire 1000 securities at the price of 59,300. So that means 1000 securities into 59,300. How much you will get as consideration, ma? 1000 into 59,300. So you will get a consideration of, yeah, 5 crores 30 lakhs. 5 crores 30 lakhs. He'll get a consideration of 5 crores 30 lakhs. He actually lent the securities, right? Borrowed the securities. He actually borrowed the securities for 1 month. Let us assume that for 1 month. So that means on or before 30th October, he has to return back the securities to me. He has to return back the securities to me. Assume that on 10th October 2020, these company shares are trading at, let us assume 58,000 rupees. Let us assume 58,000 rupees. Now at 58,000 rupees, he will purchase the shares. He will purchase the shares. 1,000 shares he will purchase, each one at 58,000. So 58,000 into 1,000. 5 crore 80 lakhs. 5 crores 80 lakhs. Right now. Here it is 5 crores 93 lakhs. 5 crores 93 lakhs. Pratyusha, you said 5 crores 30 lakhs. How? I just blindly believe on you and written here 5 crores 30 lakhs. Which is a wrong answer. Sure. So 5 crores 93 lakhs he sold for. On 10th October 2020, the shares are trading at 58,000 per share. Purchased at 58,000 per share. That means he purchased for 5 crores 80 lakhs. He purchased for 5 crores 80 lakhs. And then he returned that 1,000 shares to me. Right? On the same day, Mr. Y returned to Mr. X. Of course, again the return also through approved intermediary. Through approved intermediary. Through approved intermediary. Now, what is the benefit to Mr. Y here because of this particular transaction? See, he got a benefit to Mr. Y. Initially, when he borrowed the securities from me, he sold it for 59,300 ma. So the sale proceeds are 5.93 crores. And later on, he purchased for 5.8 crores. So that means he got 13 lakhs as profit. The gain to Mr. Y here, 13 lakhs now. 13 lakhs. Now, because of this particular transaction, Mr. Y got a gain of 13 lakhs. He borrowed the securities from me for 1 month period, on 30th September 2020. 30th September 2020, he purchased the share. He didn't purchase. Sorry, he didn't purchase. He borrowed the shares from me for 1 month. He borrowed the shares from me for 1 month, and immediately he sold on the same day. That 1,000 shares, each one at 59,300. He sold the 1,000 securities for a consideration of 5 crores 93 lakhs, and he's waiting for the turn, that reduction in the selling price, reduction in the market price. On 10th October 2020, the price dropped to 58,000 rupees. The price dropped to 58,000 rupees. So immediately he purchased 1,000 securities from the market at each one 58,000 rupees. So that means he made a purchase consideration of 5 crores 80 lakhs. So then immediately that 1,000 shares are returned to me. I've just lent the securities only for 10 days. Within these 10 days, Mr. Y got a gain of 13 lakhs. This is the beauty of lending of securities. Are you following now? ఇక్కడ మీకు డౌట్ వచ్చి ఉంటే సార్ ఈ పని ఏదో ఎక్సే చేసి ఉండొచ్చు కదా సార్. X assume that he wants to hold the securities for a longer period. He wants to hold the securities for investment. Intraday transactions are all like this only, ma. Intraday transactions. Those who are regularly engaged in the business of buying and selling of securities, those who are entered into the intraday transactions, this is what their business activity. This is what their business activity. For lending these securities to Mr. Y, now Mr. X will collect. Mr. X will collect lending fees from Mr. Y. Lending fees from Mr. Y. Here the supplier is Mr. X. He is lending the securities to Mr. Y through an approved intermediary. Right, ma? Now Mr. X will collect the lending fees from Mr. Y, and this lending fees is liable to GST. This lending fees is liable to GST under reverse charge mechanism. Under reverse charge mechanism. Now Mr. Y, being the borrower of the securities, being the recipient in this particular transaction, he has to pay the tax under reverse charge mechanism. He has to pay the tax under reverse charge mechanism. Any doubts, ma? And here the rate of GST is applicable 18%. The rate of GST is applicable 18%. Clear? Right. So with that, we have completed the amendments in the chapter charge of GST. Right now, it's time for the break, sir. It's 10:52 now. I'll spend time 10 minutes time for the doubts, everyone. Right, up to 11 o'clock, you can ask the doubts, ma. Those who are not having any doubts, you can leave the meeting and enjoy the break. At 11:30, we will meet. 11 to 11:30 break. At 11:30, we will meet. From 11:30 to 1 o'clock, we will continue. Another 1.5 hour session. Okay, everyone? Right. Now, those who are having the doubts, now you can ask me now. Everyone?